Good afternoon, everyone. You may recall that we started a webinar series for Mohawk Valley and Northern New York Builders Exchange. Tracy and Phil had asked us to put on a series of topics that may be relevant, not specific to COVID necessarily, but just generally some relevant topics for construction and the topics and issues that you guys deal with on a regular basis. You've got enough of COVID information from us and others, so we thought we would try to get back to some normalcy. In the past, we have always done it where there's kind of one person talking that kind of gives their spiel, and maybe there's some back and forth. Today's going to be a little bit different. We're going to talk about claim identification, tracking, and management of those claims, but we're going to do it less in a form where we just give our own 2 cents and we tell you what to do and how to do it and what to look for. Instead, we're going to have much more of a round table discussion. We got a panel of experts here in their own field, and we're going to discuss kind of a fact pattern and go through how we would address it from our own unique perspective. And hopefully you can take away something from it. What I'll also say, like with the other webinars, is it's going to be published online. So you'll be able to view it, start, stop, view it all at once, whatever works for you. And then if you have any questions about comments that we made or follow-up questions about, hey, if the fact pattern was a little bit different, how would you address this? By all means, direct those emails to Tracy at Mohawk Valley or Phil at Northern New York, and then they'll filter them out to who it would go to. So specifically, say it's a legal question, it would be filtered to me. If it's a pure accounting question, it would go to Bob, and so on. So if you have questions, by all means ask. And hopefully next year we'll be able to do things like this in live format like we've always done them, so that the people that are in attendance can ask questions right then and there. So with that brief introduction out of the way, I'm going to introduce myself, have everyone get introduced themselves, and then we're going to jump into a brief overview of the fact pattern and then start discussing it. So you may or may not know me because I've done seminars and webinars for Mohawk Valley and Northern New York in the past. I'm Jason Bailey with the firm of Sheats and Bailey. We have an office here in Liverpool. We also have an office down in New York City. And our practice is limited to commercial and industrial construction. Anything that relates to construction, we do it. We don't do anything else. So if you need a will or a trust or an estate, don't call me. I can't do it. I would be committing malpractice just by asking you questions about what you need. So that's Sheats and Bailey in a nutshell, and I think most of you have interacted with us or at least heard of us. So I'm going to shut up now and let everyone else introduce themselves.
Bob Teska with Bowers & Company CPAs. I'm the partner in charge of construction services there. My practice is, I'm going to say 95% focused on contractors. I've got clients throughout the state, and we work with them specifically to have financials that meet the needs of bonding requirements as well as banking. And then on the tax end, we take advantage of Code Section 460, which is specific to contractors, to mitigate and defer all the taxes we possibly can.
Thanks, Bob. Pat Regan, partner with IOA, Insurance Office of America. I oversee the Binghamton and Syracuse offices. Our focus is construction insurance. We've got all facets of products and services in that realm, including a proprietary program called Risk Score, which has been a big win for a lot of our clients.
Everyone, Matt Briggs, also with Insurance Office of America. I'm an agent, have been doing it for over 20 years, and a large segment of my current book and my historical accounts that I've worked on are in the contracting space, so a lot of experience in this realm.
I'm Jim Garito. I'm president of KT Construction Consulting. I have over 30 years experience in the industry. I provide litigation support to Sheats and Bailey, as well as support to contractors, small and big.
Matt Kaiser from Insurance Office of America. I'm a partner and risk manager here. I've been with IOA for about 8 years, or in the insurance world for about 8 years. Prior to that, for about 12 years, I was a project manager, construction manager for some various GCs throughout upstate New York. And again, my expertise or experience is construction. So have years of experience firsthand, so to speak, in the field. So.
Thanks, Matt. Mike Tresidder, also with IOA. I'm a surety bond professional. I've been with IOA since January this year. Prior to that, I was an underwriter for Liberty for the last 12 years. Deal with construction companies and construction companies only.
All right, so with that out of the way, through the magic of IT professionals and our favorite videographer over here, Tom, he's going to put up on the screen a fact pattern. It's a one-page fact pattern. It's important for you guys to read it because only after you read it and get a gist of the fact pattern will anything about what we're going to talk about make any sense. So hopefully right now you can just hit pause, and Tom is going to have a link or otherwise make it accessible for you guys to pull up this fact pattern and read it. So assuming you have read the fact pattern, we want to jump into it. And I want to give you a little bit of background on this. It's a fact pattern that is real. I didn't create this out of whole cloth. This is a case that my office litigated and a case that Jim served as an expert on. It's not a case that I personally litigated, but someone else in my office litigated. So I thought it would be appropriate to utilize here because it involves a lot of issues. It involves issues created by the general contractor. It involves issues created by the subcontractor, and it involves issues created by the owner / design professional. And it's basically a mess, a 7-figure mess going in both directions. So in a nutshell, what it is we represented a precast contractor from Canada. We represent a lot of Canadian clients that do work in the US. We don't do any of their Canadian work, just their US work. The Canadian precaster was subcontracted to manufacture, supply, and erect precast. And as you would probably imagine, there was a schedule that said that the work needed to be completed by certain dates. And if you look at your fact pattern, the finish dates were November 15th, 2016 and December 20th, 2016. That, however, those dates were never met, not even close. The work actually wasn't, precast wasn't erected until July of 2017. That's a huge difference, right? And why did that take place? Well, part of it was because you can't hang precast without having the steel erected, right? The steel was supposed to be erected in October of 2016 and November of 2016. It didn't actually get erected until March 2017 and May of 2017. So our contractor, we had the precast subcontractor, as I said. Our subcontractor expected to be hanging a precast in sometime after October and November of 2016. Wasn't even close. So that's the first example that I want to bring up. The difference between delay and disruption or impact, right? So oftentimes a contractor will call me up and say, hey, I was supposed to be the only one in a designated space installing, say, sheetrock. And when I showed up on the designated date to install the sheetrock, there were 5 other trades there. I could perform my work, but I was much less efficient because all of these other trades were there, right? And they come to me and they say, well, I've been delayed. And it's less, I categorize that less as a delay claim and more as an impact claim, right? If they anticipated being in a particular room in a particular area and having sole access to it on a particular day and they show up and there are 4 other trades there, their efficiency just plummets, right? I don't characterize that as a delay claim. I characterize it more as an impact or a disruption claim. What we're talking about here, I characterize as more a true delay claim. If the precaster actually showed up on site with the precast panels, there's no way they could have erected them. So that's more of a true delay claim. And that's where I would tell the client immediately, hey, take a look at your contract. What do the provisions in the contract say about delay? When do you have to put the person on notice? Who do you have to put on notice? And the form, right? I just had this conversation earlier this week where a client had to put a public owner on notice of a similar issue. It was combined both delay and an additional cost. And I said, okay, look in your contract who you have to put on notice. I said, then you always have to look at the back of the contract because oftentimes there is a provision that says how you have to put them on notice. Does it have to be a particular form? Does it have to be sent via certified mail? Does it have to be sent via certified mail and email? You always have to look to see how the notice has to be given, to whom it has to be given, and in the format in which it's delivered. So that was the first issue. Boom, a delay right off the bat. We want to show up for work and do the job. We can't. Okay, what does the contract say about putting them on notice? Follow that. That's from the subcontractor standpoint. Now, what Jim knows uniquely more than anyone else sitting in this room is the GC also had the site package and the steel, correct?
Yes.
So if he hadn't had the steel package, the GC would have been,
The site package and the concrete foundations.
The concrete,
not the steel.
Not the steel, okay. So if the GC had caused no problems with the site package and the foundation, but the steel is not being erected in a timely fashion, that's an example of where I would tell the GC the same thing I told the sub. But instead of the sub putting the GC on notice, right, the GC should immediately then be putting the subcontractor, the steel subcontractor, on notice. Same rules apply. Look at your contract. Who do you have to put on notice? Does your subcontract dictate the form of that notice? And does it dictate how it needs to be sent? So right off the bat, right, at that initial delay, if depending on where I'm situated, if I'm the GC or I'm the sub, I'm putting people on notice. Because if you don't put them on notice, you can forever lose your right to collect that money. So that was the first impact. The second one that I saw on this job was the architect was obligated to provide responses to the submittal package within 10 days. My subcontractor, precaster, prepared all of the submittals, gave them into the GC, who then filtered them up to the architect. The architect didn't get back in 10 days. The architect piecemeal responded to them over a 6-month period of time. And what he also did was he was subtly making changes to the scope of the work via the submittals without necessarily announcing it. So again, depending on where I'm situated, if I'm the sub, I immediately want to put the GC on notice. Hey, I'm not getting a timely response to my submittals. I'm not getting, oh, and by the way, there's a change in scope. And if I'm the GC, I want to potentially put the owner on notice. Hey, I got a sub that's doing what they're supposed to be doing with submittals being timely transmitted, and they're being impacted, potentially being impacted. So oftentimes what I tell the GC in that situation is when they get a claim from the sub, don't endorse it, don't start a claim yourself, simply transmit what the sub's claim is. So the precaster submits a claim saying, hey, your architect engineer is delaying, your architect engineer is changing things. The GC takes that and simply transmits it upstream. Instead of agreeing with the subcontractor's claim, because the GC never wants to be in the position of, hey, on paper, agreeing with it, the subcontractor's claim, but then not be able to recover it upstream. So, and Jim, I'll have you chime in because you're much closer to the facts than I was on this. Do you recall how the architect or engineer, how he changed any of the submittals, or how the scope of work changed in any way on this job?
Yeah, it almost became somewhat of a design build for the precast. The drawings didn't show every detail, so the architect used the submittal process to fine tune the design, and with that it created havoc with the detailer, because the detailer had to deal directly with the architect to get stuff resolved, or it would have taken even longer. Just in connection to the steel, this is a precast job with stone and brick veneer on the precast. That wasn't coordinated in how it was going to line up and how it was going to look in the field.
So let me ask you, Jim. So let's say my precaster recognizes that the submittals are being changed. As you said, fine-tuning the design via the submittals. The precaster recognizes, oh, this is going to be extra work. He calls me and explains this to me, and I say, okay. I start the conversation the same way I start almost all of my conversations. I need to see the contract. I need to see what the notice requirements are. Let's put them on notice. But from your experience, from the actual contractor's experience, and yours as well, right? If you're that sub, if you're that precaster, and you know you're going to be submitting a claim for some of the examples you just gave, what are the types of things that you would start tracking in the field and making sure not only that your superintendent is aware of it, but also the project manager and the home-based team are aware? What are the things you would look at?
Yeah, one of the first things that I would do, I would get with my accounting team.
Smart guy.
and identify a cost code, so stuff can be tracked from day one. You don't want to get into a position where you're finished with a job, you're sorting through invoices. Was this part of the claim, or wasn't it? Track it as soon as it happens, and if you're not fancy with cost codes, just photocopy the invoices and put it in a separate folder. There's lots of ways to do it, but you need to, from my perspective, it's always easier. You put them on notice, you get with your accounting department and track the stuff as it's happening. So you're not trying to recreate the wheel, and you're more accurate.
So I want to get Bob's input, but can you give us a little bit more of an example from a contractor's standpoint, like, hey, what would so let's say the connections on the precast are being modified through the submittals. That causes you to incur some additional manpower in the field. What are some of the things from the contractor's standpoint that they should be tracking, and how should they be tracking it? If it were you.
Yeah, like I said, they have a cost code, so they would identify, John Doe spent 4 hours making a modification in the field to erect the panel, and he'd also put in his daily reports.
Thank you.
Every contractor should have some type of daily report, whether it's whatever the company's format is, but they should have that. So you have the record of what happened in like a little notebook, like you're developing history of how the thing is developing.
And what are some of the examples of the information that you would typically put on a daily report versus what are the types of information you would put on the daily report when you're getting ready to track an additional cost?
If you can identify the cost or the cause is important, and if someone directed you to do something, they're saying, well, we want you to change this, we want you to do this, and if that's a constant pattern, who told you to do it? The superintendent, for the GC told me to do that, or there's an RFI that whatever the source is, you want to create the historical data as it's occurring.
And so what if you got, in your experience, who's usually keeping making the daily records, Jim?
It would be the superintendent.
And so the super's if he's got a big crew on the site, some people are doing regular work, some people are doing extra work. How would you note that in your daily records?
Depending on the form, I recommend that companies have like a standard form for the daily reports. And they'll have a section, out of scope work, change order work, or key topics. And that's where you'd fill that in. But once again, you also want to try to identify the labor hours as a separate code. So that, say for instance, Jason's a carpenter. He works 4 hours on the claim work, and he works 4 hours on base bid work. You break that out, so you can easily go to accounting and print a report that identifies the hours Jason had and the day that he performed the work. And you tie that into your daily report, what he was doing that day. So it becomes a much stronger claim when you do it like that, instead of, again, trying to put it all together after the fact.
I have a quick question. Say that you're the super and you're directed to do something you consider out of scope and most likely will be a change order or claim. At what point would that superintendent have a conversation with the owner or the GC or whoever's directing them to do that out of scope work?
Yeah, the superintendent is the guy, basically, in my opinion, he's in the battle lines, okay? So he needs to coordinate with his project manager. The project manager makes those types of decisions with the owners of the company. I typically did not like the superintendent dealing with those topics in the field because it gets messy. You know, let the project manager deal with it. Let him create the email and the paper trail. That's typically what I would recommend.
And just to jump in on that, I have done a lot of individual in-house trainings for clients of ours and I start a lot of them the same way, which is the majority of the problems I see with getting paid for extra work comes down to a fundamental lack of communication between the field guy, usually the superintendent, the project manager, and the AR AP people. And so if the superintendent, to your example, is trying to be a nice guy or is told to do something and he or she doesn't even know it's extra work, they don't communicate it to the project manager, or there's some sort of disconnect there. So the project manager then can't call me up and say, hey, can you review the contract and help me put a notice of claim in? That fundamental lack of communication is the overwhelming majority of problems that I see. And so if you can get that better line of communication between the superintendent, the project manager, and the AR/AP people, you would avoid a lot of problems. So anyway, getting back to some of the things. So I like what you said about tracking and distinguishing between if Mike, half his day is working on contract work, the other half of the day he's working on extra work, and it's broken out on the, not only on the daily worksheet, but that, or the his timesheet, but as well as the log. Then you can kind of give some of that stuff to Bob, right? And then Bob can do his accounting magic. You know what I mean?
Another thing, on a job with multiple claims, you should have multiple cost codes, multiple mechanisms. So for instance, again, Jason, if he's working on contract work for 4 hours, he's working on claim work for 4 hours, but they're two separate claims, they should be broken down cost code wise. So we go to the accountant, the accountant can produce a report stating that these are the days that Jason worked on claim work.
Yeah.
It's easier to, it's the communication's important, and the tracking from the infancy is very important. It just makes it easier for Jason and me if I'm putting together a claim.
Yeah. And so so with the extra work items, it's instead of putting in blue widgets, you're putting in gray flux capacitors. That's a little easier to identify. But when it comes to delay, that's a little bit harder. If it's a pure delay, like the first one I talked about, you show up to site on day 30 and they're not ready for you and they tell you to come back in 45 days. Well, that's easy. I'm going to ask for an extension of time that's commensurate with the time that I've lost. But the first example I gave, where you show up in this room to sheetrock and there are 4 people here that you weren't supposed to be here, and now you got to work around them, that's a little bit harder to track. So I can give you an example where there's 1,000 different ways to do it. There's no perfect way to do it, but I'm going to talk about a couple examples, and I think Jim can probably chime in on some of these, and I know he's dealt with them personally. So I had a client that was supposed to have, different than this case, that was supposed to have sole access to a particular work area and was supposed to be able to access the work area through a front entryway. That didn't happen. Complete change. So and instead they had to go all the way around the outside of the building and through a different entryway. He actually did a time trial of how long it took to go from what he anticipated, where they were unloading materials, and up to where they started work. And then, even though he wasn't supposed to go through the original access point, he did, at least once, just to time it. He literally ran a stopwatch on both. And then he sat and he picked out 3 random hours during the day, and he picked a random section within each hour, and he counted up the number of times his workers walked from the material, from where his materials were, up to where the work started. And he was able to calculate out essentially an efficiency. Right? That's not the only way to do it. There are a lot of different ways to do it. I don't know if you've had any experience with how you've tracked delays in the past, Jim, or inefficiencies, I should say.
Yeah, inefficiencies. One of the ways I ended up tracking inefficiencies is, as a project manager, I always monitored the cost implications on jobs and against the work that's being performed. And if I could identify that we're way over on something, I would look at what's happening in the field. So as project manager, I would go out to the site and I would focus in on a couple activities and study them to determine, well, this is why they're driving around the building. Mm-hmm. It's taking us longer to get to the site, or if it's a block and brick job, we figured on using a certain type of scaffolding, and we're forced to use a different type. Well, there's a productivity loss in that. So to get back to Jason's comment, expand, as a project manager, you need to monitor your costs as money's being spent. And I did some civil work. We're replacing riprap. The unit price job. We bid it by the unit price. We tracked it every day, and within a week we realized that our placement was 30% of our estimate. So we identified right there was a problem. We changed our technique. We ended up making money on the placement. We didn't wait till we were finished with the job and lost money. So you need to track stuff as it's occurring.
And Bob, so let's say Jim sits down, let's say one of the Mohawk Valley members calls up Jim and says, Jim, I'm running into an issue. Can you help me identify and track this? So Jim goes in, kind of audits where they're at, and gives them a path forward for how to track, what information to gather, et cetera, et cetera. They start to sit down with you. How can you help them more from a pure accounting standpoint, help them track that?
Are we talking directly for a claim or just in general in the general ledger?
Either or both.
Okay. Yeah, I think what's most important is to have, from just a pure accounting thing, is just to have segregation of accounts in your general ledger. You don't have to have 50 accounts, but you have to have enough separation in your account structure so that you're covering the big things like materials, supplies, labor. Break your labor out into the different types where you might just have overhead labor. You're going to have direct labor, rentals. You want to have enough segregation so that each type of expense that you're incurring can be placed in the right place so it shows up in your general ledger. After that, you need to think about allocation rates. So if you own your own equipment, you're not renting it per se, but there's a cost. There's maintenance costs involved in it. There's depreciation, fuel, etc. So those costs have to be allocated somehow. So, to be more sophisticated, you need to be able to allocate the cost of ownership into your job costing, so you're capturing that both when you're bidding it and as you're performing the work. And then, if you're looking at it from a claim situation, I can't reiterate enough that communication is huge. people in the field have to let the people in the office know there's a situation. And then from there, I totally agree. You know, every cost has a, you know, should be tagged to a job. Once you get into a claim situation, maybe your job number is, you know, 20-123. You know, we have a claim. Now maybe the claim piece of that is 20-123A. You know, same job, but now we have this separate scope. And so now costs are being tagged to that. And the direct costs are easy, right? I've got materials, I've got labor, we're indicating that right in our timesheets, etc. But you have to think beyond that. Do we have equipment that's idle because it's not being used? Well, that's a cost that you're absorbing that you shouldn't be. So that needs to be tracked. Do you have people in the office, like maybe an owner who typically is, he's just an overhead guy, you know, general overhead. However, because of this claim situation, he's now spending 30 hours a week on this. Well, that's labor that needs to make sure you're capturing and allocating back. And I think it's those, you know, the costs that aren't necessarily direct that are where people lose it. You know, I think photocopying invoices is huge. You know, having it and then putting a summary sheet on top of it so that, you know, it's simple. You know, anyone can look at the summary sheet and say, yep, there's an invoice that matches that number. And then that stack will tie back into your general ledger coding for that new job code that you made. And if you do that, it's pretty well bulletproof. The last thing you want is just to pick a number and say, here's my claim, throw it and see what sticks, because probably not much will.
Yeah.
So you talk about the field talking to the office folks.
Mm-hmm.
Sureties typically want to know, how frequently are you having meetings internally to discuss job costs and, I guess, bigger picture work in process schedules or WIPs? Do you have any general thoughts or a, you know, best in class type of response as far as how often people should be meeting to review job costs regularly?
I mean, I think the best in class do it weekly. You know, if you're a smaller contractor, maybe you don't have that many jobs going on. If you did it monthly, I think that's solid. I think it's important, though, in those meetings, you've got to include the accounting staff so they can hear firsthand from the field what's going on. I mean, they're going to learn so much from that. You know, I've dealt with clients where the accountants were just kind of left in the corner and they were never really included on the back and forth. And then, you know, we go to do our year-end work or whatever. It's like, hey, what happened here? I don't know. They don't tell me anything. Well, that's a little scary. Yeah. And, you know, you find out things are going on, you know, shaking the tree and talking to other people. So you've got to include, you know, the accountants in on, you know, what's going on.
So let me ask, if going with what I was saying a moment ago, a Mohawk Valley member or Northern New York member calls up Jim and says, hey, I think I've identified a potential claim here. Can you, Jim, come in and help me essentially manage it, right? Put everyone on notice that I need to put a notice and really help me put a system in place to make sure I'm in the best position possible to recover as much as possible. And then would you be able to do the same thing? In other words, would you be able to then take that information from Jim, sit down with the client to make sure they're capturing all of the things that you just talked about?
Oh, without a doubt.
Yeah.
I mean, you know, that's a value-added service, and I mean, those are the type of things that, you know, you invited us because we're experts, so if we can't do that kind of thing, we shouldn't be here.
Hey, Jason, just from the insurance perspective too, not all delays can be turned into insurance, but there are some circumstances where they can. So having that detailed information, again, if you go to an insurance claims guy and just say, hey, we think we lost X, they're going to be like, yeah, no. You know, but if you come with a super detailed list and itemized and with all the good records, way more likely that they're going to pay that claim out accurately.
And what, if you can, what types of claims have you seen that have the potential to be paid through insurance?
So going up to, we kind of blazed over the structural steel portion of this.
Yep. So that's going back to the fact pattern where the structural steel needed to be erected before the precast panels. Right. Our sub could put the panels on them. And the steel was several months late. Okay.
So depending on why the steel was several months late. Okay, so I'm going to throw out a hypothetical scenario because we don't know in this.
Yep.
Let's say that the steel erection contractor had an order in for the steel and there was a fire at the steel foundry, and that delayed the production of the steel, and therefore the steel contractor has no steel to erect.
Yeah.
There's a coverage that the contractor can have called business income and extra expense, and there's also a sub coverage of that called dependent property business income and extra expense. So they're dependent on the steel manufacturer for their business. So if contractor is covered for fire damage and there's a fire at a dependent property, now that business income and extra expense can trigger and actually pay for losses sustained. Again, they're going to have to keep good records and show how they lost, right? Because assumingly somebody's going to make a claim against them, and it was out of their control. Now, if it was something in their control, that's where insurance is not going to pay.
Yeah.
Like if they just do a bad job or some, you know. But that type of a scenario where it's truly an accident out of their control, we can find coverage in some areas.
Does a client of yours, just I don't want you to name anyone, but I'm just thinking off the top of my head, a specific client, do they have to ask you for that? Because I didn't even know it exists. Or is it something that you guys just say, hey, this is something you should consider because this is the line of work you're in?
Yeah, so the primary use for the coverage is when somebody has property and, like, say your building burns down and you need business income and extra expense because you're going to incur more expense or you're going to incur loss of income because you can't do your job the way you were doing it because your building's gone. You got to find a temporary location, or you've got to, you know, buy new equipment that's an increased cost. Most contractors are pretty light and they think they can, you know, I'll just rent the next building down and we'll be up in one day, no big deal. So a lot of them don't even buy this coverage to begin with, although we do recommend they buy it. It's also how it's written is important, right? So some will have it on there with 100% coinsurance. Coinsurance is another whole crazy insurance topic that is probably way too deep for this, but if they have 100% coinsurance and they are only carrying like 5,000 or 10,000 of contents coverage in a rented premises, well, that's kind of all the coverage they have. Everything over that and a loss is going to have a huge penalty to it.
Okay.
So there's, you know, we can go really deep, but there's various types of that coverage that we would recommend they buy for these types of situations.
Okay. See, so when I'm talking about my job and what I do, I see people's eyes glaze over.
Yeah.
Did you see mine just glaze over there?
It's tough. It's tough.
To go off what Matt was saying as well, as in the insurance world, it depends on, because you asked the question, do we give this to every one of our contractors, or do we, and insurance, it all depends. So if you're a framing laborer, or you provide labor, you don't buy the material, you don't necessarily need this. But if you're the door supplier, and your doors are what, 4 to 6 weeks out, or depending on the types of doors, there's a lead time on doors. So if that truck crashes on the highway and all your doors go up in flames, and now you got to go back to the manufacturer. So it depends on what your service or material or product that you're providing will determine how much, or what kind of insurance you'll need to cover or prepare.
Yeah, if you're a framer and you're buying lumber, except for this summer with treated lumber, you couldn't find it anywhere. But in general, you're 86 lumber burns, you go to the next lumber yard, you buy your stuff, maybe you incur a little bit of cost, but it's probably not even worth turning a claim in. But there's definitely instances where it would make sense to have that, and it's not a huge dollar amount to buy this coverage generally.
Gotcha. All right, so jumping back into the fact pattern, because there are several instances, several triggers, if you will, for different claims. We talked about showing up and the steel not being erected, that triggers a delay claim, right? We talked about the architect engineer not being nearly as responsive as he was contractually obligated to be, and then modifying the submittals or modifying the design via the submittals, which then triggered an additional claim from the sub, not only for a delay, but also extra work. It also triggered a potential claim from the general contractor to the owner, because this was not a design build. That was the owner's rep that was delaying everything with the submittal packages. And so then I want to move into the next aspect of the fact pattern, which is, because the architect or engineer had delayed things so much, and because the steel was so delayed, my precaster said, I can't have my plant sit idle for 6 months while you get the steel up and I get my submittals back. So, like, I'm guessing most of the people that are going to watch this, they deal with this all the time. They're supposed to be on site on a designated time doing work. Things get jumbled, things happen, they're not there, they can't be there because the project's not ready for them. They didn't take on extra work. They gave up an opportunity at other work because they anticipated being on site for this particular job. These guys, recognizing that there was a huge delay, said, hey, we're not going to have our plant sit idle for 6 months. We're taking on other jobs. And if that's going to impact production, you, Mr. General Contractor, need to find a replacement manufacturer. So that's another trigger right there for the general contractor. If I'm the general contractor, even though I may have some egg on my face because I had the site package, or maybe I have some egg on my face because my steel subcontractor wasn't on time. If I, Jason Bailey, drafted the contract for the general contractor, it's going to be drafted in such a way that I can still try to hold the precaster to that schedule, and preventing him or her from giving up that manufacturing space or giving it to other jobs. So, and in this job in particular, not only did the general contractor have to provide a payment and performance bond to the owner, the general contractor required the sub to provide a payment and performance bond. So that's where Mike might get a call from the general contractor saying, hey, your precaster was supposed to get me X amount of precast by a specific date, and now they're telling me they're not going to do it. So I, Mr. General Contractor, am going to consider placing a claim on the bond. And when that happens, what's the bonding company's reaction? What do they typically do?
I mean, bonds exist for a reason, and it's to protect, in the case of public fund, taxpayer dollars, to ensure the project's going to be completed per the specs in the contract. So, in the case of the GC going after the subcontractor, the GC may have required those subcontractor bonds for various reasons. They might have a policy in place that says we're going to require any subcontractor above $100,000 or above $500,000, they're going to give us a bond, and that's our policy. And it's to ensure that we're protected for critical subcontractors that we're dealing with, especially in the case that maybe you have a GC who's more of a paper GC and not doing a lot of the site or civil work or steel work. And so in those cases, you now have recourse if you do have a subcontractor who's ultimately failed and not lived up to their contract. And in my opinion, you really get hurt when said subcontractor goes out of business. And if you hadn't required that they provide you with a bond, then you've got limited recourse, especially if it's some kind of bankruptcy. And you might have who knows how many people in line. Mm-hmm. The other aspect of this would be the surety company of that GC might say, we need you to require all these critical subcontractors to provide you with bonds. Otherwise, we're not going to give you that performance and payment bond.
Okay, so if you had the GC, you may have told, you as the bonding company may have told the GC, to get this, for us to supply you with bonds, not only do you have to pay the premiums, but a requirement is you have to make sure the subs get bonds as well.
That's correct. And,
okay.
And that could be because it's the largest job that you've ever approached and considered going after, or maybe 2 times the largest project that you've ever considered going after. And it's coming from the surety company, not the agency per se.
Sure.
But they're trying to do everything they can to mitigate the risk of something they might see as, wow, this is more than you've ever done before. Or maybe it's a change in territory or change in scope of work. You're a general contractor who all of a sudden says we're opening up a heavy highway division and we're going to build bridges and roads, and we heard the margins a lot better in that space, so we're going after it. And, you know, the surety might just say, conservatively speaking, we want you in support of you, long-term client of us. You better get all the subcontractors that, you know, it might be every sub or it might be critical path subs. You need to get subcontractor bonds from them.
Yeah.
So, and, you know, in this case, I don't know how it ultimately turned out, but it's certainly going to catch the attention of the surety when you go to make a claim on the bond of their client. And I'm sure the contract and I'm sure the bond form reads that you have X amount of days to respond as the surety. So, and many a times that will turn into a meeting of the surety, usually claim personnel, and the contractor's representative, maybe the owner's rep and the subcontractor's rep, to kind of hash things out.
Mm-hmm.
Yeah.
Yeah, go ahead.
Well, there's another component to discuss on that too with this scenario, and it's a compressed schedule. So now you've got a different schedule than you set out,
Mm-hmm.
and you probably most likely have more subs on the job at different times than you're expecting, right?
Mhm.
So that creates the possibility for, you know, workers' comp claims, liability claims. There's different things moving in patterns that you weren't expecting, right? The other thing that we've seen that I know our clients do that sometimes we advise against, but it happens anyway, is we're on a compressed schedule. There's scaffolding there that you guys put up. There's your lift. We need to use it. Is there a contract between those guys? Probably not. So what happens if something happens there? There's no coverage because it's not yours, and there's a claim. So
can you, I think I understand what you said,
yeah,
but I want to make sure everyone watching understands.
sure.
So can you break that down a little bit more? Because when I hear the words no coverage,
Mhm.
it scares the hell out of me, right?
Right.
So can you break that down a little bit more?
Well, you're talking about first of all, if you're talking about an additional insured status, right? So, and for that to be in force for one carrier to provide coverage for another, there's got to be a contract in place. And so sometimes that can be GC to sub, that can be sub to sub, depending on what the nature of the work is. Okay.
So in your example, let me back up. I know, I see this on a regular basis. A client will call me up and say, hey, another sub wants to use my scaffolding, or another sub wants to use my X or my Y. Can you put together a simple indemnification agreement, right? But I think what you're saying is, in the instances where they don't have anything between them,
Right.
so let's say Jim is a drywaller,
Mhm.
and I'm a mason, right?
Yep.
And one of us has equipment on site. Let's just say I have some scaffolding on site, and Jim wants to use it for a period of time, and I just say, go ahead and use it, with no indemnification agreement, nothing in writing. And Jim uses it, his employees use it, and they get hurt. You're telling me what? That there's potentially no coverage there?
Well, potentially. I mean, you know, if that scaffolding comes down and somebody gets hurt, that's a mess, right?
Yeah.
Because that's gonna, every tier is gonna get pulled into that. So,
Okay.
and then there's finger pointing. Well, it was your guy, but wait a minute, it was your scaffolding. But wait a minute, the GC is in charge of the safety of this whole project. So, where does that fall? So, yeah, potentially, there could be coverage, but it's going to fall back on the wrong GC. It's going to fall back on potentially the owner of the equipment, right?
Gotcha.
Okay.
And so do you have general advice that you give to the Jim and Jasons of the world that are working together and maybe not?
The simple thing to do is, you know, in that case, I mean, sometimes, you know, look, at time is always of the essence, right? So if there's some kind of contract you can get in place, then put it into place. Or, you know, if it's feasible, rent a piece of equipment on your own or whatever.
Yeah.
But sometimes it's just not feasible because of time and space. So just put some kind of an agreement together between those two.
Have a paper trail of some sort.
Right.
Yeah.
Right.
And so it's funny you brought up compression, because that's kind of the next layer of this fact pattern. Because when our sub said, hey, we're giving away the manufacturing space to other projects. The GC went out and acquired some precast, right? We still produce some, but they went out and acquired some from a different precaster. And then when we showed up to erect it, we had a compressed schedule. So instead of say, I'm just going to pick a random number, instead of having 45 days to erect the precast, we only had 30 days to erect the precast. So now we're working overtime. We're trying to put more people on, but there's only so much you can do with precast to increase the efficiency. It's different than, say, drywall, right? The safety issues certainly go up if you tried to put up too much precast too fast. But that compressed schedule is now another trigger, in my opinion, for the subcontractor to make a claim. That when they're told by the general contractor, hey, you now have less time than you anticipated, to me, that's another trigger for the sub to look at their contract, look at the notice of claim provisions, follow them to the letter of the law, as we talked about before, and get it up to the GC. If you don't preserve it, your likelihood of ever recovering on it is almost nothing. So, Jim, I know you've probably dealt with some compression schedules in the past, especially on schoolwork, because you have a lot of experience doing schools. And we all know the little kiddies have a designated time period when they have to go back to school. Maybe not this year, but and for those watching this in the future, it's fall of 2020, which hopefully you'll forget soon. But you know, it's always that, you know, kids go back to school around Labor Day, right? There's always that mad rush at the end of August to get work done. Going back to kind of what we were talking about before, if you're presented with a situation where your schedule is suddenly compressed, what, if anything, do you do or tell your supers to do to try to track some of that that additional work and inefficiencies?
Yeah, one of the things, let's just take an example, acoustic ceilings. Okay, if you're figuring, you know, 4 guys, 4 weeks, that's 16 man weeks. Well, that doesn't mean you put 16 guys in there doing a week. You know, this is back to, you know, so you have to go back to your original estimate, you know, that establishes your productivity rates, and then all of a sudden you're forced to compress your schedule, so now you might need 24 guys or 30 guys to do this in a week. Well, obviously you didn't carry that in your bid, but you need to, you know, once again, track that as an activity and then compare it to your bid. And one of the things I like to do when I set up a cost code is I base it on my estimate. And if my estimate's broken down, like acoustic ceilings by wing, by area, by building, that's how my superintendent tracks it. And it also identifies where I went over, where I went under, and I can identify whether there's an estimating error or a compression in schedule. Most of the time in the summers, contractors, their work is compressed. We all know, working on schools, you typically quite often run into asbestos. And everything stops while that activity is occurring. So you're naturally compressing all the other work from all the other trades. So, you know, you just look at your original estimate, your man hours, and then be able to compare them to the actual hours in the field. And, you know, again, put them on notice. I planned on 4 guys, 4 weeks or whatever. Now you're compressing this activity into 1 week. I'm going to have more men performing this work. It's just basically, in my world, it's a simple math calculation.
And would you do anything different than what you talked about before, Bob? Or kind of would your path forward in tracking something like that be very similar to what you talked about?
No, it'd be very similar. Yeah, I like how we described that.
Yeah, especially breaking it out by wing and everything.
Yep.
I mean, being as precise as possible. Well, let me say this a different way. I have some clients when they ask me to help them on a problem. I have some clients that send me electronic files separated out by folders, subfolders, detailed information, and a written summary. And I have other clients that give me boxes of documents that it looks like they ran through like that paint machine, you know what I mean, that just shakes them up. Yeah. I will tell you, the first scenario is much cheaper than the second scenario. So If you can do the work on the front end, it drastically decreases the amount of money you spend with me, with Bob.
And just so we're clear here too, we're not talking about just claim scenario per se, correct? This is general practices.
Yeah,
that-
Sure. Yeah, and I would think from a bonding standpoint, because isn't part of the way, I mean, you guys judge someone's ability to get a bond based on their financials and how well their documents are in place, right?
Correct.
So if they have something like what Jim's talking about, not just on a claim, but this is how they run a job, and they're tracking their costs and their efficiencies on a particular wing of a school throughout the entire school, that's got to make your job easier, but then also you feel better about giving, and you're more likely to give that person a bond, correct?
I think when you're looking at financial statements and how someone runs their business, it becomes quite prevalent quickly if someone's very organized and of the mindset to document, track. And you're gonna see it through the balance sheet, the income statement, and then sitting down and talking to the folks that are running their business. How often do you review your job cost reports? How often are you preparing a WIP to review with your project management team and superintendents? 100% that does ultimately play a big factor in level of surety support someone might or might not get.
Okay.
Something else that, I'm piggybacking off of what you're talking about with, you're typically encountering a delay at a school, right? And now with COVID, who knows what delays you're gonna get, right? That presents a situation I think any contractor that's doing business in New York needs to be cognizant of, is the volatility and the cost of the construction umbrella right now is, we're seeing immense increases in the umbrella rates, right? So you bid a job that you think is gonna end, September 20, right? But this thing gets extended into, March, April, May of 21, and your renewal date is January. You may not have loaded that new umbrella cost into your bid. And so it's just something that we're constantly going over with our clients when we're doing their bid loads for them, is, make sure that if there's any anticipation that this thing could go long, that, you're buffering that with potentially what could be, 20, 30, 40% increase.
And theoretically, if that's part of this delay claim and your umbrella rates just went up 30% or 50%, or that's what we're seeing, you can add that in to, hey, I wouldn't even be on this job right now. We'd all be done, but now I've incurred this additional cost on my, whatever policy it is because of just what the industry and the market's doing. So you can, again, detail that into whatever the costs are. I want to say something to kind of go back as well, as the communication, having been in that position of project manager and communicating with superintendent, and one of the GCs that I work for, and looking at it from a general contractor standpoint. I know we're talking about subs going to GCs, but GCs always also going to owners, is that documentation is critical of this happened, so then this happened, and the critical path ultimately on this project changed, and having that storyline, if you will, that detailed of, it's the daily reports, it's the what other subs did this affect, because in theory, subs talk to subs, and if you're delayed on the precast because of the steel, well, now your window guy can't put his windows in, so the window guy is now talking to the precast guy, and guess what, GC, you're now gonna be put on notice from the window guy and from everybody else down the line. Once that domino falls, if the subs are talking to other subs, and they theoretically will be, you're not gonna get put on notice for one, you're gonna get put on notice for 15, however many contracts are down the line. So, and that all goes into that one instant. Okay, the steel isn't up for whatever reason, here are these other 13 claims, but it all stems from this one. So if I'm a GC, I wanna put that all in so that I can talk to the owners, and whether it's an A&E issue or whether it's an owner-related issue, it's all there. And in terms of insurance world, and some stuff's not covered, but you're able to put something like that and show your policy, procedure, whatever it may be, into your, I would do it, we would do it, put it in front of your insurance underwriter. Yeah, it may not be an insurance covered claim, but the insurance underwriters are going to want to know, like, these guys are on top of it.
Mm-hmm.
Because now what happens with the condensed is more people rushing around in a smaller area, a tighter space. You're going to have theoretically unsafe working conditions or less safe working conditions. You put more people into the cookie jar, there's only so much space, but showing that you can monitor that and you can, your best ability to control it is going to make an insurance carrier more interested in sitting down at the table and saying, okay, this company has got their ducks in a row.
Mm-hmm.
And at least they have policies and procedures, versus just handing you that shook up box of paper at the end and saying, well, we think we might have something here.
Just piggybacking off of that.
Yeah.
And I mentioned financial statements and balance sheets. And when we're talking about claims and maybe the shoebox approach and the less organized contractor who's not documenting everything they should be, many times on the financial statement, it's going to show up as an asset, and that asset's called an underbilling, or the more technical term, Bob.
Cost in excess of billings. Cost in excess.
Cost in excess, and so you can count on your surety underwriter when you're having your meeting asking, okay, I see that you have $1 million in underbillings, and then when I look at your WIP schedule, I see that you have $200,000 in underbillings on this particular project. And the more they hear that, well, what happened on this project was our superintendent, he's a really nice guy, but he kept being asked to do certain things that were outside of the scope of the contract, and that's what that represents, and we're currently fighting with the owner of the GC to get paid for that work and for them to recognize it as a legitimate change. The more they hear that, the more problematic it could potentially be.
Matt, you talked about getting this in front of your underwriter, right? And one thing that's very important is the contract that you've got between the GC and the owner in the regards of, depending on the nature of the claim, and maybe it's not relevant in this exact claim case, but if you were deemed, the GC deemed responsible for a delay because of faulty design, okay? That's a professional liability coverage issue, right? You want to make sure, first, that you've got that coverage, and two, that your contract states in there something, and we can, you can work with your agent on the wording, but this says my scope of work and my professional services. If it doesn't say professional services, you may have a problem recouping that coverage from the carrier, because the carrier is going to say, well, this isn't, you're not doing professional services. This policy is covering you for professional work that you do. And we've seen that exact scenario come back to bite some clients. So that's something that we're talking about quite frequently with them.
So you were saying claims, the subs talk, and then it leads to, there's some claims, the other subs would be putting in claims. That was one of the things that happened here in this fact pattern. So the site work is delayed, the foundations were delayed, the steel was delayed, and as you would imagine, when there's a 6-month delay out of the ground, it has just this impact throughout the entire project, right? It's not like someone had a scope of work that they had originally had 8 months to do, and they miraculously did it in 2 and made up the 6 months, right? It just followed through to every single trade. Well, this is, in this fact pattern, and this is true, where the GC really screwed up was subs submitted claims, and between the GC's own costs that it was trying to pin on the sub and costs that it got from claims from other subs, it was nearly $3 million worth of back charges it tried to levy against my precaster. And when did it submit those? After the job was long done. So it didn't give my guy timely notice. It didn't give notice per the contract. So as you can imagine, we're saying, no. If you knew about these costs from day 1 or day 31, and you didn't tell us until the very end, and oh, by the way, it was right when you were supposed to make final payment, it's really takes away some credibility from the general contractor. And it makes my job that much easier if I'm representing the sub to beat up the general contractor, because you didn't put us on timely notice. You didn't give us an opportunity to try to either fix the issues if they were fixable on our part, or an opportunity to really inspect some of these issues that you say we created, right? So it's almost robbing us of an opportunity to defend ourselves. So the GC really screwed up by kind of holding back until the end, because, and I get it, you want to get the job done, you don't want to ruffle too many feathers, but listen, no matter where you are in the chain, if you got a claim, you got to submit it, because if you don't submit it per the terms of your contract, you run the risk of losing it. And the GC here, I mean, really waited until the last possible minute. And
Can you define long after the job was complete?
well, long after meaning we're precast, right? Which means there's an awful lot of work that gets done after precast is installed. We didn't get it until the job was essentially complete. So it wasn't even like they waited until the last bit of precast was hung and inspected and improved. No, the windows were in, the electrical was in. Yeah, they're in the process of moving desks into the building, and then they hit us with this nearly $3 million back charge.
It also seems, why wouldn't the main claim be against the steel erector? Because that was the first domino that fell, correct?
No, the GC was actually, Jim, you know this fact pattern better than I do. The GC, I think, was a little slow in the site work package and the foundation package. So the GC had a little egg on his face himself.
I gotcha.
Yep. They were self-performing those aspects of the contract. So they had a little egg on their face.
Gotcha.
So, and the other thing is, I tell clients all the time, you cannot fight a war on two fronts. What do I mean by that? If the sub is causing a problem for you, right, that could delay the project, but the owner's rep and the owner are also doing things that are delaying the project and impacting things, you can't really blame both. You can't. You can't fight a war on two fronts. I love it when I'm a sub or I have an owner and I see that a GC has done that. Because you're talking out of both sides of your mouth. You're blaming the sub for all of the project problems in one letter, but then I see another letter to the owner blaming the owner's rep, the architect or engineer. So I'm like, okay, that's when I'm going to go to someone like Jim and be like, Jim, do you think he tracked to figure out what the problems the sub actually caused and the financial impact versus the architect or engineer? More often than not, after he digs through all the records, the answer is no. And so that's why I was saying earlier, if a sub has an extra work or a delay claim, you simply pass it on up to the owner. You do not endorse it. The same way if the owner has an issue, right, that may be sub-derived, you kind of pass it through to the sub from the owner without necessarily endorsing it. That's one of the only ways you can kind of walk the line of fighting the war on two fronts. And why I say walk the line is because oftentimes early on in the project, you don't know which is the winning horse. You don't know whose side you want to be on. So you have to walk that line until the end to figure out, okay, which one is going to be best suited for my financial health. And then you pick a side and you run with it.
Jason, did the GC in this case withhold payment?
Yes.
And did your precaster make a claim on the payment bond that was in place?
Yes. Yep.
Okay.
Yep. Yeah. So we sued the contractor and the bonding company, and for an excess of. Do you recall, Jim? It was multiple millions.
Multiple, 2 or 4.
3 or 4 million, and a GC is trying to back charge for just under 3 million, as I understand it. So it's a mess. It's a mess.
What would you see if this fact pattern was a little bit different, but it's a sub that caused the issue to another sub, but there's no contractual, it's all through the GC? Do you recommend the GC still take that fine line of, I'm just taking it from one sub and passing it off to the...
Yeah, that's I think less so. If one sub is clearly causing the problem, and let's say the precaster in this situation did cause a whole bunch of problems, and the follow-on trades now, right? They're impacted not only from a timing standpoint, from a pure delay. Hey, I was going to show up on day 31 and start my work. I'm showing up on day 61. I want a day-for-day extension. But now let's say instead of a 30-day delay, let's say it's a 300-day delay, which I have seen in Puerto Rico. That's a story for another day. Now we tie into what you guys were talking about.
Yeah.
Now instead of just a day-for-day delay, now that sub's paying a 40% more for insurance.
Yeah.
So he let's say the window guy now submits a claim to the GC. If I'm the GC, I'm taking that claim, packaging it up, back charging it directly to the other sub, to the precast sub that caused the problem. But I'm not just taking his dollar for dollar claim. I'm adding something under. In fact, if I'm drafting a contract for the general contractor, I automatically include language that says I get to mark up back charges, claims against you by 10 to 15%. Because Jim, you know how it is. You get a claim from the sub, you have to if you're the GC, you got to investigate it on some level.
Mm-hmm.
You know, you have time now that you're interacting with a sub. If the fact pattern's a little bit different, a sub's really screwing up. You got to find a fix and finish guy. You got to go out and find 3 guys, get a price from them, figure out which one's most qualified to do it in such a quick period of time. That takes you away from doing other work. So I don't just have my GCs mark it up dollar for dollar. Dollar for dollar, then there's some overhead that goes on there.
I was just curious about how that would... Yeah.
When you're talking about these additional costs too that are part of a claim, you know, in this case, delay claims, say, are liquidated damages included on both sides as far as the costs that we're talking about here, the $3 million back charge?
The owner trying to assess liquidated,
Correct.
the owner to the GC, and then the GC, of course, is going to try to
Right.
pass that down. And then in a situation like this where the GC had the site work and the foundation, and then the steel seemed to be a little bit late itself, but the steel is a sub, I would want to see how he's trying to allocate, the GC that is, how he's trying to allocate those liquidated damages. More often than not, I find that they don't allocate. They try to hit up a portion of the subs for the same LDs, right? They're trying to get paid twice.
Profit center.
Yeah, hey, well listen, you can't get it unless you try. So it's just, when you get claims like that, you can't roll over. You really got to demand their backup for how they calculated these things, right? Before you sign off on any sort of back charge or change order. So, guys, that's all I had for the fact pattern. Those were the claims that I briefly wanted to identify. I didn't know if anyone else had anything else to offer or to chime in on anything before we wrap up. No?
Nobody wants to hear more insurance stuff.
Yeah, I'll second that.